Without further ado, we've got Kip Herridge on the line. Kip is my favorite economist and kind of the in-house economist of this show, War Now. Kip is a brilliant guy, and his results speak for themselves. Over 2,000% up in profits for the last 2 years at his website, vraletter.com, VRA letter, LETTER.com. Hey, Kip, how are you?
I'm great, Wayne. How are you, my friend? Happy New York Primary Day.
Thank you. Are you surviving the torrential biblical floods of Houston?
It's been brutal. We're lucky. We're like you are in Vegas. We're about 30 minutes away from downtown where all the devastation was. We're good here, but man, it was tough for a lot of our friends.
Well, and it might be tough moving forward for a lot of our friends in the stock market, right? You're feeling now, I assume, from all the newsletters I've been getting from you, is that we're headed for some rocky times. Is that correct?
You know, it's really a tale of two markets. The VRA, as you know, Wayne, I do things quite a bit differently than most people do. I'm a big-time contrarian. This is what you and I have in common. But I manage money for my subscribers and my clients in good markets and bad. I really don't care. I'm agnostic, which way the market goes. But I've learned over the last 31 years to pay attention to the sectors and to the industries where the flow of funds is heaviest, those money flows. And so that's really what's allowed us to book a couple 1,000% in net profits over the last 2 years. No one's come close to that we know of. And yes, Wayne, to answer your question, incredibly bearish as of the close today. And I can give you three really quick reasons why.
Yeah, three reasons why you think we should be selling our stocks or selling short stocks.
Yeah, that's actually what I'm saying is this is time to short the market because, and again, I'm a combination of short-term and long-term. We have long-term positions that we love, like my stock of the century, and of course the mining stocks, which we're just destroying the market with the returns in these this year. But for those that like short-term trading, of course we do that too. And from a combination of both fundamental and technical analysis that my VRA system uses, again, I've done this for 31 years. Right now, here's what I saw at the close today. We're seeing complete capitulation by the bears. And here's how I can tell you this. This is fact. This is not a guesstimate. This is fact. Today, at the close, the put-call ratio for options traders, which is a great contrarian indicator, is now at 2 times calls to puts. You rarely see this. Matter of fact, I think this could be, remember, this is an inverse indicator. This could be the most bearish reading of the put-call ratio going back to the 2007-2008 top, right? And on top of that, and my second major contrarian indicator that just flashed again today is the VIX, which is the volatility index, is now back to 13. This screams reversal. Every time the VIX has hit this level, it may take a week, a day, or maybe even a month. But each time the VIX has hit this level, it's signaled a major reversal. And again, I'm going back over really about an 8-year trading period when the market started to get completely based on what central banks were going to do. And so those are the primary reasons. But I just flashed a chart out to my subscribers tonight. And I said this is an 8-year high, but I don't remember ever seeing the indexes doing what just happened today. As of today's close, both the Dow Jones and the S&P 500, the two most important stock market indexes, not just in the U.S. but on the planet, today closed at a 5.3% premium to both their 50 and 200-day moving averages. Now, for technicians, this is most important. This is also, again, an 8-year high. This kind of premium does not hold, cannot hold, will not hold. Everything I see, Wayne, tells me that we are at a major capitulation on the buy side and that we'll see a sharp correction in the markets that will make us a lot of money.
Now, you're just totally a technical guy, and this is all technical stuff, but I'm just going to tell you, Kip, that I come at it from a totally different world, and I'm not a stock guru like you, and I'm not a brilliant guy who made 2,000% in the last 2 years, but just from my pure gut instinct common sense, I want you to know that I, Wayne Root, have 2 friends in the last 48 hours who have sent me emails pleading with me and pleading with all of their friends to somehow write them a check or hand them cash to save their lives because they're about to become homeless. And these are normal people who had normal jobs. In all the years I've ever known them, they've made money, and they're telling me they're about to be evicted from their apartments and or their homes, and they're about to be homeless. I have never had anyone send me anything like that in my entire life, Kip, and 2 came in the last 48 hours. I believe we are in a dramatic economic collapse for the middle class. Yes, the rich are getting richer on Wall Street, but for the average Joe or Jane working class, or the average small business owner who might make, 6 figures but not millions, everybody's in severe trouble. That tells me the stock market can't be at all-time highs, and if it is, it's the calm before the storm, and there is going to be a drastic reaction going back the other way. What do you think about what I just said?
The market has one primary objective. A lot of people are going to find this maybe even offensive, but it's true. The market's primary objective is to prove the most amount of people wrong possible. The market wants to get everybody on one side and then pull that rug out from underneath them. Wayne, you've seen it happen how many times in your career, right?
All the time.
This is what happens time and again. And folks, just look it up. Just pull up a chart on any of your favorite charting services and pull up a chart of the Dow Jones, just for the 1-year chart. Pull up a chart of the S&P 500, 1-year chart. You tell me what you see. We've had not 1, not 2, not 3, but 4 swings of 15% in a 1-year period. I can't find another time that this has happened. I'm talking about swings up and down, up and down.
We by the way, Kip, we didn't have this like before the 1929 Great Crash?
You got to remember, the markets were quite a bit different then. They weren't as actively traded. They really were an insider's game. The money lost there. My grandparents were farmers. They didn't have money in the market. It didn't hurt them at all, right? They ate well. They helped their community. People didn't have debt then. People paid their mortgages off. They didn't have mortgages. So we're looking at a much different economic time. But, Wayne, I can't find another period where this has ever happened in 1 year, period.
So it's got to be scary time. I mean, you and I both follow a website called ZeroHedge.com. I've always loved the insights I get at Zero Hedge. I don't know if all of them are right. Sometimes you've told me they're a little bit too pessimistic. But have you seen the quotes lately from top economists saying that we're on the verge of an economic collapse?
Oh, yeah. I mean, there's no shortage of those, right?
But what's your thought about them? What's your thought about them?
I'm sorry?
What's your reaction to them?
I mean, I read the same things you do, right? How can I disagree, with what – these are people, by the way, many of the ones you're talking about that I know personally and have known personally for 10, 20, 30 years. And I respect them a great deal. I've had them come and speak at my events, right? And so, Wayne, I can't disagree with any of that. But for me, I'm about timing. For me to make money, I've got to be in the right place at the right time. And so, could the market collapse tomorrow? Absolutely. I can tell you in the span of 30 seconds about 10 major black swan possibilities that I follow closely that could happen 1 minute from now, and the market would drop tomorrow 10 to 20%. Now, you tell me, how many bullish events could you guess about that could happen that could make the market go up even 2 or 3% from here, right?
But by the way, just off the top of my head, major terrorist attack, number one. Mm-hmm. Number two, some sort of economic statistic coming out that finally shows us how bad things really are. Number three, massive earthquake in California. That's the one I remain worried about day and night. Someone's going to tell me I'm crazy. We are long overdue, and the ring of fire, as they call it, has been on fire. This is the most active year, I believe, in modern history for massive earthquakes, 7 or above. Japan's had multiple ones. We had one the other day in Ecuador. It just seems like everything is in place for a massive California big one. And my question is, if America's $19 trillion in debt, some say it's actually $219 trillion in debt. That's just the number you hear about with fake accounting, 19. What would happen if we had an event far worse than Hurricane Katrina in New Orleans, and it would cost this country hundreds of billions to rebuild California? Where the heck would the money come from?
Right, it is not there. And see, that really is that is the major problem that I and a lot of other people have with central banks, with the Bernanke's, the Greenspans, the Yellens, and the Federal Reserve, the central bank chairman of the world, is they've used up their bullets. So if something bad does happen, what will they do? As far as the seismology and these other possibilities, we can only pray these don't happen. But I'm talking about the two biggest bubbles in the history of the planet, debt and currency bubbles. These are the two things that keep me up at night, because we are going to wake up at some point or wake up in the middle of the night, get a phone call, whatever, and find out that Japan has imploded. Okay, Japan remains my ultimate black swan possibility, but you could say the same thing about 20 other countries. that are just living pretty much like most Americans are, paycheck to paycheck. And if one thing goes wrong, it's over. The global economy is so interconnected now that if just one of these black swans happen, again, we open up down 10 to 20%. We're talking about losses, and that would just be the beginning, right? That's like, by the way, take a look, for those that like the charts, go back and look at the initial crash of 1929, and then look at the rally that took place into 1932, 1933. It looks eerily like the rally we've seen right now. They don't match up exactly, but it gives you an idea of how markets can go up irrationally, right, longer than they should. But at some point, when that rug gets pulled out, they're right back to fresh lows and then brand new lows. So that's unfortunately, I see that coming. But again, my job is to keep people prepared and ready, regardless of what happens, up or down. And I love the miners. If we have time, I have an offer for anybody listening, just for tonight, for your listeners, because you guys have been so great to us. But do we have time to talk about that?
Well, we just have a minute, so let them know your offer right now. Then we're headed to ad break. What is that offer? Okay,
really quick. I have loved precious metals since 2003. Now this is the birth of the greatest bull market in the history of both precious metals, but more importantly, I believe for investors, the miners, the mining stocks. Folks, we're already up 490% since January the 17th in just two of my recommendations. So it's not too late. Here's the offer. Just go to my site, braletter.com, hit the contact tab, send me a quick email and say, I'm a friend of Wayne, or I heard you on Wayne's show, and you'll be eligible for a 90% off special. I've never done this before. You'll get my special reports on the miners, a special report on my stock of the century, and more importantly, you'll get my daily updates from now until when you choose not to be a member.
All right, 90% off. Go to vraletter.com, vraletter.com. My good friend Kip Herridge, you know we talk about him all the time here. He's my favorite economist. He's our in-house economist here at War Now. Thank you, Kip. Have a great day.